Okay, let's talk about the only element we have left. Let's talk about capital, which we now, well, we're now referring to it as owner's equity. All right. So when I say capital or I say owner's equity, I'm really talking about the same things for now, right? To keep it simple, that's how it is. So we're still working with the equation assets are equal to capital plus liabilities, but I'm going to now refer to capital as owner's equity. Now, you may have heard many different definitions of capital, and they're all right. But now we're going to look at owner's equity, aka capital, right? And those are the resources in the business that belongs to the owner of the business. All right, so resources in the business that belongs to the owner. That's what we mean by owner's equity, aka capital. But I know that owner's equity is what is really on the outline, so let's just stick with that. And owner's equity, I write it as O/E to save space and time. And these are resources in the business that belongs to the owner. Now, owner's equity is affected by two things. One, net profit, and this increases owner's equity. And two, drawings, and this decreases owner's equity. Now we have a formula that we use to calculate what owner's equity will be at the end of the year. All right, so we start out with a particular amount of capital at the beginning of the year, and at the end of the year that amount will be different. All right, so we start out with that. Now, closing owner's equity is equal to opening owner's equity, which is owner's equity at the beginning of a year, plus the net profit made in the company during the year, minus drawings if there is any. Now, drawings is the amount of money that, well, the value of resources that the owner takes out of the business for his or her personal use, right? That's what we mean by drawings, right? So owner's equity is affected by two things: net profit and drawings. So if we start out with a value for owner's equity at the beginning of the year, and during the year the company made some profit, that will increase the owner's equity. And then at the end, and during the same year, the owner withdrew either cash or any other resource out of the business for his personal use, which is drawings, that will reduce owner's equity. And hence we have this formula right here. And so we can look at an example of this. If, for example, January 1. So for example, at the beginning of January 2015, owner's equity was, say, 500,000, and during 2015 the company made net profit with a value of, say, 20,000, and during the same year, 12-month period, the owner withdrew resources out of the business adding up to $5,000 in total. Then what will be the owner's equity at the end of this year? Right? Calculate it. And this we're going to do using our equation, which says closing, which is end of year opening equity, is equal to beginning of year opening equity plus net profit minus drawings. So let's calculate. So closing owner's equity is going to be opening, which is 500,000, plus net profit of 20,000 minus drawings of 5,000. So that gives me 520,000 minus 5,000 to give me 515,000. So at the end of the year, this company's owner's equity would be 500,000. So the owner's equity for December 31, 2015 would be 5,000, and this owner's equity will start the 2016 year for this company, right? And that's how you use this equation. This equation is used to also find other elements. So in the next lecture, I'll show you how to manipulate the capital equation or the owner's equity equation using one or two examples. Toodles. You can visit that lecture anytime. Toodles.